Good evening. Welcome to the Swing Trade Newsletter. This is your host, Anmol Singh. Let's get started. Let's start with a market overview and then we'll go back to taking a look at the stocks and things of that nature. First, a brief analysis on the markets here. Markets have recently been really choppy. That is because of the uncertainty that looms ahead, because of the risk of the Brexit that might happen on Thursday. So we'll dive into what that means for the market, what that means for the equities. But first, let's take a look at the charts from a technical perspective. So taking a look at the SPYs, the pattern is actually really clear, right? What's basically happening is that the spiders have formed a supply zone right into this area. You see here, this little whole area has become supply zone. And if I draw it like this, for those who've taken our PTS course or any other course for that matter, this is a basic concept called resistance, or what I like to call supply, right? As you can see here, it's been banging its head in this area. Every time it touches this, it falls down. Touches it, falls down. Touches it, falls down. Touches it, falls down. So basically, every time it gets into this area, there are sellers hanging around at that area, which is called supply, right? And because of that, you can see the market has a sharp decline. It went back up again all the way and had a sharp decline again. Okay, but then what that created was an area of demand or support, right? Demand or support. So there's demand in this area, there's supply in this area. Now what's happening is we tested that supply zone again here, we pulled back, we tested it again here, and now we pull back again, right? So that becomes our supply zones in the market. That being said, spiders still have this little uptrend line trying to hold. It's looking like it wants to break. It almost did break right there, but then it tried to come right back up again. So now what we have here is also this area of support. Okay, so this was our little flag. We broke that flag to the upside, touched the supply zone, fell right back down, found support at this trend line, the top of that flag, and now we're back up again. So basically what this tells me is that what the market might want to do is chop around in this pattern for a little bit, right? And reason why that's happening is because, as I mentioned, the Brexit, and we will cover that in a little bit. Let's dive into the Qs, the Nasdaq ETF. What's happening here is also really evident. Now, for those who are new to technical analysis, it might not be clear to you at first sight because you have been taught to look at these levels horizontally, right? But what I like to take a look at is using trend lines. And we can see here, bam, right? We can take a look at it this way as well. Draw our uptrend line, bam. So you see what we get, right? If you've been taught to draw horizontal lines, I actually prefer to draw trend lines. And now we see what kind of pattern we have. This becomes a broad tightening pattern, which is coiling to potentially break out or break down, right? Now, as I'm drawing this, I think the pattern might have become more clear to you, right? Maybe at first sight, looking at naked charts, it might not been clear, but now as I'm drawing this for you, this pattern might have become clear. So either the market, as it gets to the end of this pattern, right? This was a broad pattern, now it's getting tighter and tighter. So at the end of the pattern, the market is just going to decide to either break out or decide to break down. Yeah, that's what happens on these tightening patterns. But for now, we held this trend line again. We're holding it so far. We could easily break it, but we could also just move all the way back up again and follow this pattern up. The reason why this uncertainty is happening, as I mentioned, because of the risk and the uncertainty that looms on the markets because of the Brexit. Now, what is the Brexit? I'll keep it really simple for you. What the Brexit mainly is Britain is deciding or to stay or not stay or to exit the European Union. So Brexit is just a fancy word of Britain exiting, right? Britain exit, they just made it Brexit. So it's nothing but a fancy word. What basically means is that, now they're going to vote on, the country's going to go to vote. They're going to vote on whether they want to stay in the European Union or whether they want to exit the European Union. I personally think they should exit the European Union. However, that is unlikely. It could happen, but I think it's a little bit unlikely. The US wants Britain to stay in the European Union. The Asian countries such as India, they want Britain to stay in the European Union. Even the European Union wants Britain to stay in the European Union, right? I think the Prime Minister David Cameron, he also wants Britain to stay in the European Union. However, there is a possibility that they might exit the European Union, right? There is a possibility. Now, I think it's probably not going to happen, but there is a high possibility this time around that it could happen. So the results will finally come out on Thursday, somewhere around that time, and then we will find out what's going to happen. Now, what that means for equities, it's simple. If Britain decides to stay in the European Union, then what's going to happen is that stocks are going to see a bounce. The market's going to see a bounce, right? And, the currencies are going to also see a bounce, okay? The pound is going to see a bounce. Right. Now, if they decide to remain, okay? So Britain decides to remain, the stock market is going to bounce, the stocks are going to bounce, the currency pound is also going to bounce. Now, if the Britain decides to exit, what's going to happen is that the euro currency might go down a little bit, and also currency US dollar might go down a little bit. And if the euro goes down a little bit, it's probably going to go down just a little bit, but not that much. So that's basically what's going to happen when the Brexit decision comes out. As far as stocks are concerned, only thing you need to know is that if they exit, the European Union, that will create a lot of uncertainty. Thus, stocks are potentially going to go sideways or go down. If they decide to stay, stock market's going to see a little rally. Okay, that's basically what it means. Going into Brexit, we are going to hold our positions because for technical traders, we're just going to stay with the pattern and not trust the pattern too much. Just trust the pattern and not to pay too much attention to these decisions. However, as far as forex traders, unless you know what you're doing, I would probably not, stay in a trade. So that's basically what's happening here. Let's take a look at some of the trades. Before we get into the swing newsletter trades, I want to mention some of the trades that I personally like that are setting up. One of them is Shake Shack. So you see the monthly chart on Shake Shack. Let me delete these drawings because they might be a little distracting. But you see the weekly chart of Shake Shack, how it's been went up initially after the IPO, had a pretty big spike, and now has pulled back down here. So now what's really happening is if I draw a trend line like that, you're gonna see that it's also tightening up just like the Q's pattern that I draw. So that doesn't mean it's going to explode. That doesn't mean we're going to buy it, right? Because it could also break down, yeah? So what I want to see is when this pattern gets above all of this little base, gets above that resistance and starts to pop, I want to let it pop, and I want to buy that next pullback to take Shake Shack higher. That's what I want to do. So an example of that would be Grubhub. This is a trade that I took recently. This is one that's in my long-term portfolio. I basically just bought it when this channel broke right there. Mentioned that in the trading room as well. So I bought this as a long-term position for myself when it broke this little resistance at $25. Still holding that. We'll see what it gets us, but it is approaching its target zones right around there. Another trade that I am in, again long-term, is Shopify. And this also is setting up, guys. You can already see my lines there. It is setting up if you're not in Shopify. I got in a little bit early because I picked this little bounce right there. So when it broke here, just like Grubhub, right? It broke, it pulled back into support. Something what I wanted to see in Shake Shack. It held. I bought it right at $24 something. However, for you guys, you see this trend line that's coming up. If it breaks this trend line, watch this higher as well. So a couple trades that I've got going on. My best trade so far this year has obviously been the Amazon. This was given to our trading room members and those who listen to my live streaming podcasts on Periscope. So this was one that, obviously we bought it long for myself right here. And since then it's seen a pretty significant, almost a $200 move on the Amazon. But anyways, let's get back to trades at hand. Another trade that I really like right now, and I'm probably going to buy this thing, in the coming days, is Procter & Gamble. We are going to call this in the newsletter as well. You see this little resistance area on PG, right? It's been basing sideways for a while. And what I really like about this stock is relative strength. Most important concept, right? market's going sideways to slightly down, and this one is actually going up. Yeah, so that is called relative strength. It's stronger than the market. Imagine if the market's staying sideways or going down a little bit, and this is actually going up. What's going to happen if the market actually now decides to go up? This is going to go higher, right? That's what's going to happen. It's probably going to go faster than the market. So again, doesn't mean it's a no-brainer trade. Doesn't mean it's 100% confirmed, because it does have some resistance areas on the weekly. However, I do like this pattern, and I think it's going to be a good one to potentially continue higher. Nothing too big, but maybe it's going to try and test these highs around $90. That's what I'm thinking personally. But keep in mind, this has also the possibility of continuing to go sideways on the weekly chart. PG has the habit of doing that. It did that for a year, 1 year, 2013 to almost 2015. It did that, right? For a whole year, and then it went. So there's a possibility it can do that again, and you might get stopped out or something like that. So just keep in mind those factors, because it could also go sideways and then go later in the day. Okay. Another thing to keep in mind is the WDC. That's the trade that we have open in the newsletter. This is one that I really like. Pulled back to the 21 EMA, found support, starting to move higher. And now what's happening on the WDC is that we've got this little area right here to contend with, and if we finally break that, I think it's going to go straight to the 200 period moving average, which is around $54, and then maybe even higher towards 59. So like this one, WDC. Some of the other ones to keep an eye on are BABA. Again, nothing too special on BABA. I'll show you what I'm looking at, but this is not one that I'm going to take at this point in time, but I'll just show you what I'm looking at for longer term positions, right? So you're going to see the same concept happening here again. It's in this little zone. So if BABA decides to break this little area right there, gets above here and pops, this is also one that could be interesting for a trade to the upside. Okay, so again, something to just keep an eye on for now. Twitter is also one that I like. Again, no trade at this point. I already have some of Twitter long for swing trade. I personally bought it when it broke this little downtrending pattern at support, because there was a multiple support from the prior time here as well. For now, for longer term position, same thing as I always say, is your weekly trend line. That's what you need if you want to trade on a higher time frame, right? See this little downtrend line on the weekly Twitter. So if it breaks this to the upside, you can look to buy the next pullback into that trend line and then play this thing higher. So this is also one to keep an eye on. Okay, so before we end, let's take a look at the US oil. Oil has remained strong. I've been talking about this little trend line for a while. It's in this channel where it's going up, down, up, down, up, down, up, down. It's probably just gonna chop around in this channel, and then we can see what happens. So if you're long this, I would stay long. If you're short this, I would not short it unless it breaks this trend line right there. Okay, so that's oil. Let's take a look at GLD. Gold had a decent move. These are my trend lines from last time. We can see here it broke it. It pulled back to support, as I always talk about, and then it moved up again. Now it's probably looking like it wants to pull back again. That's partly because of the US dollar, right? So we can see here, US dollar, also the UUP ETF is also in this massive channel, just chopping around in this channel. So we got to wait and see. They have inverse relationships. If the dollar goes higher, commodities like gold, silver, oil go lower, and vice versa. And that's something also to keep an eye on. Let's take a look at the Russell ETF, IWM. Again, IWM stronger than the Qs and the spiders. It is also holding its uptrend, held it here once, twice, and held it here again. So basically for IWM, all you have to keep an eye on is this trend line. If it breaks it, could start to get bearish, but as long as it's above it, there's no reason to be bearish. Okay, so keep that in mind. But I think for now, we're going to end the newsletter on an early note, right? Mentioned a couple of ideas for you guys: Shopify, Grubhub, WDC, Procter and Gamble, Twitter, and BABA. Something to keep an eye on for future. But for now, let's settle in. We already have an open position in WDC. We also have some other open calls in the newsletter. So if they trigger, awesome, we'll take it. But I think we'll keep it at that for this time being until maybe the Brexit decision comes in. Then we can have more clarity on which way we should aim to position our portfolios. But we had a great, bull call spread on the Amazon, 100% profits. So hope you guys are taking advantage of that as well, right? As a long-term or swing trader, it's really important to do, a bunch of different things, right? Maybe do swing trading stocks. Maybe you're diversifying using options trades, and especially the trades that we have given out in the newsletter. They're really easy to mimic. They're really easy to follow. It's really simple structured trades. So something you guys can keep an eye on and to maybe incorporate into your trading. If you're not into options yet, you may decide to get into that. And also, if you want to learn more about options, and if you have not taken our options course, feel free to get in touch. It's only $6.97, which is basically, one trade away. So if you want to sign in for that, let us know. And also, we have also started a new service because I have been trading Forex for a while, right? And people always say, hey, you trade Forex, you had these great trades, but why don't you do anything with Forex? Why don't you start something with Forex? The reason I never started something with Forex is because I only do swing trading and long-term trading with Forex. I do not day trade Forex, right? So what we did now is I had another person join us, Dale Pinkert, who runs our Forex trading room, and I call out my own swing trades that I'm taking in my Forex account. And they're called the same way, just like in the newsletter. I will say, hey, euro US dollar, buy here, right? Buy stop order here. Sell, my stop loss order is here and my target's here. And usually they're really simple to follow because they're set and forget. I set my target price, right? Let's say this is my entry. I set my target here. I set my stop loss here. And usually I'm not doing anything. I'm just letting it hit the stop loss or letting it hit the target. Occasionally I might bring the stop up and I'll send a text message through SMS or through Twitter, private Twitter channel, and I'll ask to say, hey, let's bring our stop loss up. And that's usually how we are managing those trades. I'll say, okay, stop loss up here, and really simple to follow. So if that's something that interests you, check it out. It's a free 2 weeks free trial. Check it out, see something you like. If not, wish you guys all the best, and let's see what this Brexit decision has to offer. Thanks.